everyone, it's Prashant here. Welcome to my YouTube channel and thank you for joining me in today's video. As you can see from the title of this video, Robinhood has filed for its IPO. I think this is very exciting news and I suspect that this IPO is going to be huge. Although Robinhood has faced some challenges over the last year and a half, as we will see later in this video, it still looks like a solid company. Robinhood has filed its S1, which is a document that companies have to file when they IPO. This is a 431-page document, and obviously you're not gonna read it. Don't worry about it, I did. Let's dive in. First things first, let me briefly touch upon what Robinhood is and what an IPO is in case you don't know. So Robinhood is a brokerage firm which allows its users to trade in stocks, bonds, options, and cryptos on its platform, along with offering a debit card. Now, Robinhood was the first brokerage firm to get rid of commissions when placing trades. Before Robinhood came along, brokerage firms used to charge money for each trade you placed upon it, usually around $10. Robinhood came along and completely turned this business model around on its head and eliminated commissions completely. How they did this, I'll get into a little bit later in the video. I will say this, Robinhood was the first brokerage firm that I used when I started investing. This was around 5 years ago when I first graduated from college and got my full-time job. Since then, I've become heavily invested in the stock market. I've influenced my friends and family to start investing as well, and I'm running this YouTube channel to teach everybody who's watching everything that I know. I like to give credit where credit is due, so thank you Robinhood for introducing me to investing in the stock market. Now, if you're not aware, an IPO is an initial public offering. This is the first time that a company sells its shares to the common public. Before this stage, a company will go to angel investors for raising money. But this is the first time that common people like you and I can go and buy shares of a company. Usually this is done by listing the company on a stock exchange, typically the New York Stock Exchange in the US. Guys, before we continue with this video, I want to take a second to ask you to smash that like button and that subscribe button and share this video with someone you think might find this interesting. This helps me out a lot with the YouTube algorithm and motivates me to keep making these videos. That being said, let's get back to talking about Robinhood. Alright, let me throw up Robinhood's S1 on the screen here so you can see what it looks like. Alright? Okay, so here we go. You can see right here, United States Securities and Exchange Commission, which is the body that governs this, Form S1, Robinhood Markets Inc. So you can see it's filed on July 1st, all good, right up here. And then we can see here that it is incorporated in Delaware. You know what's funny? The headquarters of Robinhood are in California. It says right there, Menlo Park, California, but is incorporated in the state of Delaware. In fact, most large companies in the United States are incorporated in Delaware. There is a very specific reason for this, but I'm not going to go into that in this video. Comment below if you want me to make a video about this. Okay, so next we're going to jump to page 18, where we can see pictures of many of the products that they offer. So we can see on the bottom left, they have a debit card. Next up, we can see that you can trade stocks in it. In fact, they show a stock of a company called Tiger Corp. I wonder if this is a real company and if it is, if their stock got a boost after this prospectus came out. Next, on top of that, you can see $5, which is fractional shares, which in my opinion is a complete game changer. It allows you to buy a fraction of a stock so that if you want to buy Amazon stock and it trades for more than $1,000 or $2,000, you don't need to have all that money. You can just use $5 or even $1 to buy a fraction of that share. A huge game changer in my opinion. Next, we see Robinhood Gold, which is like a subscription service for a fee every month, which gives you access to some advanced features. A very smart move from Robinhood in order to gain monthly revenue from its users. And then finally up top, you can see that you can trade in Bitcoin. In fact, you can trade in several other cryptocurrencies, including Ethereum, Cardano, I believe now, and even Dogecoin. Okay, next we're going to jump into page 26. Which is kind of a marketing page, but don't worry, I'm going to peel back the layers of the onion and dive into the juicy details that they actually hide in boring black text later on. But let's take a minute and look at this for right now. Okay, so first thing we see that they have 18 million funded accounts. That's an insane number of accounts. In fact, that's more people than the population of 46 US states. If all the users of Robinhood were a state, they would be the 5th largest state by population after New York State. Okay, next we see that they have 17.7 monthly active users. This means that not only are there 18 million funded accounts, 17.7 million of those accounts, or 98% plus of those accounts, have monthly engagement. Think about it, guys. How many people are actually actively looking at their retirement accounts on a monthly basis? Not a lot, but people on Robinhood do. More than 98% of people do. This is an incredible engagement rate. Next, we see that they have $81 billion under custody. So dividing 81 billion by the number of accounts, 18 million, we get about $4,500. So this means that the average Robinhood account has $4,500 in it. Again, I think this is pretty good. I think that it is unfair to compare this number with a number from like a Fidelity or a Vanguard. Since Robinhood is newer and it on average is used by a younger person, it makes sense that there would be lesser money in this account, since younger people have not had the decades of work and saving money away that the older generations have had. On top of this, I don't think people are using Robinhood for their serious long-term investments and savings. In fact, Robinhood doesn't even offer a retirement account yet. I think Robinhood should seriously consider offering traditional or Roth IRA accounts like Webull does to make sure that they are attracting longer-term, more serious investors and grow this number in the future. Anyway, moving on, we see that 50% of all Robinhood customers are first-time investors. I totally believe that because when I first signed up for Robinhood, I was a first-time investor also. And finally, we see that more than 80% of their new customers are organic or referred, which again, I totally believe because I was told about Robinhood from a friend and that's when I signed up. Okay, next we'll jump to the last line on page 44. And here Robinhood states, and I quote, "We recorded net loss of $1.4 billion. This is what we'll probably hear over and over again with Robinhood IPOs. Robinhood lost $1.4 billion. Why would anyone invest in this? But I promise we will dig into this a little bit later in the video, and we'll need to understand a little bit more about accounting to exactly understand this. But for now, let's keep going on. Alright, next we're jumping to page 75, and I know that a lot of boring black and white text just turns people off completely, but to me this is very, very exciting. So bear with me and we'll dive through this and look at a few different numbers here. Okay, we see here that we have data for 2019 and 2020. So first, their transaction-based revenues went from 170 million to 720 million in just 1 year. That is more than 4x in 1 year. That's incredible. Then next, they have their net interest revenues, which I assume is from margin and maybe even some debit card fees, $70 million to $170 million, more than 2x. And then third, other revenues, maybe from Robinhood Gold, I'm assuming, and they go from $36 million to $61 million. Again, about 2x. So overall, total revenues went from 277 million to more than 958 million, which is about 3.5x in just 1 year. That is incredible year-over-year growth for Robinhood. Alright, now let's look at their operating expenses for just the year of 2020. Their brokerage and transaction expenses, $111 million, tech and development, $215 million, operations, $137, marketing, $185, and G&A, $294 million. All of these numbers have grown a lot year over year, but this is to be expected in a growing company. Okay, now this is where it gets really interesting. Let us take a look at this line that's in bold here. Change in fair value of convertible notes and warrant liabilities. Nothing in fiscal year 2019, nothing in fiscal year 2020. Now these two columns on the right are showing the first quarter of this respective year. First column is 2020, next is 2021. So first quarter of 2020, nothing. First quarter of 2021, $1.4 billion. Remember a few minutes ago when I said we'd have to understand about accounting a little bit? This is where that comes into play. Let's go 2 lines down. Income, parentheses, loss before income tax. So any amount that's in this line, if it's just written straight on, it's a positive, and if it's in parentheses, it's negative or a loss. This is pretty common in accounting, right? Income or loss before income tax. We go to 2021, first quarter, we see negative $1.4 billion. So as we can see clearly, this change in fair value of convertible notes and warrant liabilities are a negative, which means that they're a loss on this balance sheet, and which is driving this huge overall loss, the $1.4 billion loss that we saw on a previous sheet here. This was because of a notice that was issued by the SEC recently that said that the value of any outstanding warrant liabilities or convertible shares has to be shown as a liability on a balance sheet. Now, what is a warrant liability? It's like a stock option, but it's issued by the company itself. So the company will say, hey, I give you a warrant, Mr. Investor or Mr. Founder, that you can exercise to buy the shares at a later date at a predetermined price. So it's pretty much like a call option. If you want to know what a call option is, I made a video about this very recently. You should go and watch that video after this one. But it's a pretty similar concept, right? So if you have a warrant, you are supposed to be able to sell your shares at today's price at a later date. So SEC is saying this is a liability, and that's why this balance sheet is showing this as a negative number. Now, I expect this to be a one-time thing, and hopefully it will drop off in the following quarters or following years, or at least the value change will be very, very small, not $1.5 billion, which is a crazy, crazy amount. Now, if we go a few lines below, which is the net income or loss per share attributable to common shareholders. So the net income or loss per share is a negative $6.26, which means that per share, a Robinhood shareholder, according to this balance sheet, will lose $6.26. And this is based on using 230,000 outstanding shares. So once again, because of the value of these warrant liabilities and convertible notes being noted as negative on this balance sheet, we have a huge $1.4 billion loss, which on a per share basis is $6.26. Now, let us really think about this. If we agree that this is just an accounting thing and that this is a one-time event that will not be seen on the balance sheet in the future, and we just ignore this paper loss of $1.4 billion for just a second, for just a thought experiment, we see that we have a profit of over $45 million. This means that this is a profit per share of 19.8 cents per quarter. Now, to get an earnings per share for the entire year, we multiply this by 4 and we get nearly 80 cents profit per share. This is very, very good. For a fintech company, which is similar to a tech company, I would say that this is very impressive. Tech companies usually are not profitable at IPO. They will run as a public company at a loss for years and years and years before turning a profit. So I must say, seeing this and discounting or removing that $1.4 billion loss because of the warrant liabilities, I must say that I'm actually quite impressed by what I'm seeing on this balance sheet. Alright, now that we've seen the financials, let us jump to page 86, where a lot of risk factors that Robinhood sees to their business are noted in this page and the following few pages. Now, this is a really good thing to look at because it tells us what are the things that Robinhood is watching out for and what are the things that we can expect to see in the future as this company grows. Now, there are a lot of risk factors that are noted in this prospectus, and I'm not going to go through all of them. I will just go through some of them that I've picked out once I read them beforehand. Okay, the first one is limited operating history. Robinhood is saying that they're a young company that has not been around for a very long time. And in fact, they started operating in the middle of a massive bull run where investors generally made money. And so because of this bull run, it may have contributed to Robinhood's massive growth. And they say that it might not be a sustainable rate of growth going into the future, especially if we go into a longer bear market. The second risk that they identify is limited operating experience. And I totally agree with this. As we saw with the GameStop snafu in early 2020, Robinhood was not prepared for the amount of trading or the volume of trading that traders wanted to do on their platform. And in today's world, where brand loyalty is less, the second you inconvenience investors, they're going to move on to the next platform like Webull or SoFi or Fidelity or something else. So this is certainly something that can be a risk to Robinhood's business going into the future. As they grow, they're going to have to scale their systems much more rapidly to make sure that something like what the GameStop debacle was does not happen ever again. The third risk that I want to talk about is quarter-to-quarter fluctuations and not being able to maintain profitability. This is a pretty straightforward thing, and I honestly appreciate the honesty of Robinhood of putting this right in the prospectus. It's a growing company, and being profitable quarter over quarter is not always possible. It takes time to get there, so totally understand that. Number 4, regulation of PFOF, or payment for order flow. Guys, this is the biggest risk when it comes to Robinhood's business, at least in my opinion. And if I were them, this is what I would be concentrating all of my time on. So remember when I said earlier that Robinhood does not charge commissions for trades? The way they do this is payment for order flow. So if you remember from the balance sheet, they made an incredible $720 million in transaction revenues. Where is this coming from? Because they don't charge commissions for their transactions. All of this money is coming from payment for order flow. So what is payment for order flow? It is a completely legal way of making money through routing order flow. So what Robinhood does is it takes an order from an investor such as myself and then routes it through a market maker, which is a company that actually executes the trade. And because of this, the market maker pays Robinhood a certain amount of money. So what's going on with payment for order flow? During the GameStop saga, GameStop garnered a lot of bad publicity for engaging in this practice of payment for order flow. Congressional hearings were held and CEO of Robinhood, Vlad Tenev, had to go and testify in front of Congress. And a lot of Congress people seemed to get the idea that Robinhood was deceiving people. So now the risk is that Congress is going to regulate payment for order flow or maybe even outright ban the practice. If this happened, this would be devastating to Robinhood's business. Since most of its revenues come from payment for order flow, if Congress were to ban PFOF, this would completely devastate their business. This is the problem with having all of your eggs in one basket. Because Robinhood's revenues are not well diversified, if this one method of getting revenues gets hit, their entire business would be upside down. They would have to figure out how to change their business model rapidly and figure out a way to become profitable all over again. Alright, now let's talk about if Robinhood is a buy at IPO. Here's the thing, Robinhood is popular. With all the pumps of GameStop, AMC and everything else, along with the congressional hearings last year, Robinhood became a household name. And we just saw how much user growth they've seen over the last year. This puts them in a great spot. And as a user of Robinhood, I can tell you that the app is easy and fun to use. So I can see users sticking along for a long time. On top of this, all of their 18 million users will more than likely be at least interested in the Robinhood IPO, which gives them basically a captive market almost of 18 million potential investors, which is a great place to be in. This is not to mention hedge funds and other institutional investors. Now, typically when there's so much hype around an IPO, typically on IPO day, the stock pumps and skyrockets upwards. I'm thinking Snapchat in 2016 when I invested on IPO day, and even Coinbase from earlier this year. Unfortunately, sometimes or maybe even oftentimes now, the stock will then dump on the same day or maybe even the next day. This is because on these high interest IPOs, a lot of people and big money people will come in and buy a bunch of these shares, driving the price of the stock higher, and then instantly sell everything as fast as they can to book a huge profit. In this process, the price of the stock then falls and somebody else is left holding the bag. I've been the person left holding the bag. In 2016, when I bought my first shares of Snapchat, I bought about 25 bucks a share. I saw it rise up, I was really happy through the first part of the day, and then it dumped. And it went down to less than 5 bucks a share. And then it stayed low for years to come. And I had to hold on because I did not want to take a loss on this. After that experience, I made a rule to never buy a stock on IPO day, and I have held firmly to that rule. Now, if Robinhood offers its shares at IPO price through the Robinhood app to common investors like myself, I might buy a little, just wet my beak just a little bit for the experience and as a thank you for introducing me to investing in the stock market. My struggle is I want to believe in the company. Their product is good, their user growth is good, their user engagement is good, and they've introduced a ton of new people to investing, myself included. But here are my two main issues with Robinhood at this point. First, they're not focusing on long-term investors. For example, if they introduced a Roth IRA option, it would bring in more long-term investors like myself to start Roth IRAs with them. And because people who invest in Roth IRAs tend to try and maximize it, they would potentially see each Roth IRA investors put $6,000 of additional new money every year. Not only would this grow Robinhood's assets under custody, it would also bring fierce brand loyalty to Robinhood, since you're not allowed to take any distributions without penalties under the age of 52 years old. So people would be more likely to put more of their money and keep more of their money within the Robinhood platform for a longer time. Second, the risk for payment for order flow regulation is just too huge. Personally, I don't necessarily have a problem with PFOF. I don't really care. But it's unfortunate that they got so much bad press and congressional scrutiny over their practice of engaging in PFOF. Now, if PFOF is banned by Congress, it would decimate the revenues of Robinhood because they get so much of their money from this one practice. If PFOF is banned, Robinhood's revenues would fall off a cliff and any potential profitability is just out the door. It might take them years to redo their business model and become profitable again. This would decimate the stock price, which would obviously be a very, very bad thing for me as an investor. Already they've paid millions and millions of dollars in fines to the SEC and FINRA, and I'm afraid they're not quite out of the woods just yet. So personally, because of those reasons, I'm not too hard on buying Robinhood stock on IPO day. Other than maybe a small amount if I'm able to get IPO pricing on the Robinhood app on IPO day just for the experience. As it is, I'm a long-term investor and I use index funds to buy most of my investments and hold them for a long time. So buying Robinhood stock at this time just does not mesh well with my investment style and goals. So that's all I have for you guys in today's video. I will be following the Robinhood IPO closely and will be covering it more on my channel in future videos. I hope you enjoyed this video and found it entertaining and useful. And if you did, please go ahead and smash that like button and that subscribe button for the YouTube algorithm. If you did not like this video but you've made it this far, that probably means you like me personally, and I would request you to smash that like button and the subscribe button for the YouTube algorithm. Also, go ahead and click the bell icon to be notified instantly when I post a new video. I post at least one new video every week with great new financial content, and I would love to see you there. Also, if you haven't already, go ahead and check me out on TikTok, where I went viral recently, where I post every week as well. Thank you so much for watching, and see you next time.